All right, everyone. Hello and welcome back to Dan in Research. So today I'm going to make a very quick video, and it's gonna be about Japan and the carry trade. So in my last video, I told you, and I quote, "Don't even get me started on Japan." Okay. So I've talked about Japan many times, the carry trades, etc., and why it is so important for the global markets as a whole. So it looks like the media has already forgotten about it. You know, it's not hot to talk about it anymore. However, we are much further down the line of the carry trade than we were when we had this, um, so to speak, mainstream media talk before. Okay, so let me just quickly go over it. So, and I tell you, this one is going to be a shorter one. Okay, in short, the carry trade is simple. Japan has had one of the lowest interest rates in the world, and so the big money has borrowed in yen uh, because they have lower interest rates, and he has used those money to deploy in other capital markets, in other assets. All right. So essentially, Japan has been providing um, liquidity to the global markets, right? However, now we're seeing something else. Look at this. This is the Japanese 10-year yield. So it's been, look at this. It's been going up hard. I mean, let's look at the monthly chart. This is a scary chart, isn't it? So right here, from 2015 to 2021, you can see that the Japanese yields have been solidly negative. Now, since the Fed started cutting rates, actually, we've seen the Japanese yields explode. Okay? Right now, we are at levels not seen since 2010, right? And it's going up aggressively, the yields. And Japanese officials today said that they're gonna hike rates even more, right? So what's happening to all of those people, all of those hedge funds, all those bankers, all those banks that have borrowed in the yen? Well, they're gonna have to liquidate their positions because right now they will have to pay a lot more interest on their money, and so all of their models that their loans were based on are no longer valid since it's a lot more expensive for them to do so, right? And look at USD JPY, guys. This is today's candle. So right now we're down like 1% on USD JPY. This is big. You know why this is big? Look at this. Last time we were at these levels was in December. What happened in December? Well, we had a big sell-off in the markets, right? So you think that's a coincidence? No, I don't think so. And I'm very bullish on the JPY overall, and that is because of fundamental reasons, right? It's a safe haven asset. People flock into it once there is turmoil and a crisis. And right now, we're seeing the bond yield go up and safe haven demand as well. So this is something that is a potential headwind for the markets globally, and I do think that you should not ignore it. In fact, you should do a little more research because there's a lot of actual scholarly research, and of course I could go through that, but it's gonna be a long video, so I just suggest you go to Google Scholar, type in Japan carry trade, Japan bond yields, look at the history, look at everything, and you can make a conclusion for yourself. But all in all, this could be the spark, guys. Like, my first video on the channel was actually when the Japan carry trade first commenced, and it was a very short-lived uh, crisis, right? It was just like 1 or 2 days, and the media already forgot about it after that. So my first video on this channel was the Japan carry trade, and right now I'm doing another video to tell you guys, be careful out there because we might have a round two of this, right? And as I'm talking, the dollar is falling even more. And if you look at the euro against the Japanese yen, well, it's not looking good either, right? Even though it's up massively, and of course it makes sense since the interest rate differential is so big. But guys, all right, just do your research. I'm telling you here, just in a short format. But if you want to know more, don't forget to do more research, right? Thank you guys for watching. Don't forget to like and subscribe to the video, and have a good one.